The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. We're getting ready to a week from today. We celebrate Christmas, so we're going to have a really slow week next week. The first chart, first picture that I posted in here came from one of our friends from Denmark, showing this Fibonacci sink. He wouldn't show me the toilet. He said it was too obscure. I imagine it has the same type of spiraling down mechanism, but I thought it was really unusual for those of you that like Fibonacci spirals. It's really quite unusual. Okay, now that might even be reminiscent of what's happening to the crude oil market recently. So we'll see what happens with that, but we'll wait and see what history says. Okay, let's go on to the first part of the show. We had a very interesting question today from one of our friends in Poland, from Raskow, Poland. And I don't know if you folks know this or not, but the largest speaking Polish city in the world is not in Poland. It's in Chicago, Illinois. I happen to have a great deal of friends there. I actually married a Polish girl. She was U.S., of course, but her family was from Krakow, Poland. And so I've been involved with Polish people for a very long time, and I love their culture. I love their food, the głąbkis and pierogis and stuff, and I can even speak some Polish. Jak si masz? Dobrze. Święta noc, cicha noc. Okay, let's talk about the biotech index. This is what it looks like going back to last April. We have a very asymmetrical head and shoulders pattern, and what's so interesting about this is the fact that the time difference between the shoulder and the head is 1.618 exactly. In other words, if you took from the shoulder to the head and then the head to the right shoulder, that time difference is 1.618 coming in there on November the 16th, let's try it again, December the 2nd. So let's try that again, Larry, November the 16th. So, Larry, let's try it again, November the 27th. And that comes out perfectly. Now, yesterday, we had a mild reversal day in the IBB. It's been the stronger over the last few days than some of the other indices, but it's still in a major downtrend, folks. Go look at it since July. And you'll see after we had that island reversal, we've just been going down. Until this index gets above 343, it certainly looks like it wants to go lower. However, since September the 28th, when we doubled bottom against the August 24th low, we've had a 61% retracement and a 786 retracement. So we needed to get below 310 in order to be bearish. So the key figure here to look at is 343. If we get above that, then the thing could really have a pretty good run on the upside. Now, one of the stocks that happens to be in this index is at LabD, and I'll put this up so we can take a look at it, and you'll see a very interesting pattern here. You'll notice that it made the big ABCD pattern perfectly into September 28th. That's exactly the opposite of what was happening to the stock market. If you remember, we were making a major bottom in the IBB at that time, and at this one was making a perfect ABCD correction up around 67, and since that time it gave back half its value. It lost 50% of its value from October to December, and then the last 2 weeks of rally that we've had, actually 3 weeks, 13 days, we stopped exactly at the 382 retracement. This stock looks like it's in big trouble. It really does. Of course, these biotech stocks, they can come out and be bought overnight, but the chart pattern on this LABD is extremely bearish. I mean, to only rally to the 382 after the big ABCD pattern is really very, very negative in my opinion. Now, we did stop yesterday at the 786 retracement, but that's we'll have to wait and see. But anyway, this is really bearish. It stays bearish until it gets above 42, which is about a 30% move in this stock if it can do that. So we'll have to wait and see here. Okay, now we want to take a look at the first. I want to mention something about the Santa Claus rally. Last year, when we had the famed Santa Claus rally, you'll notice what happened from December the 15th to all the way to February. The market basically was in a downtrend. We had a pretty good rally from the 14th into the 28th near the end of the year. And then from then on, the January or Santa Claus rally, or January rally, what you want to call it, I mean, it was basically down for a solid month, and then we rallied. So let's keep an eye on the patterns and try not to lose sight of what's going on. That's basically, what I'm watching here. But we hit some major spots yesterday on the downside that have to be absolutely, well, not absolutely. There's no absolute anywhere. But let's take a look first with the, we want to watch the NASDAQ, because we had a beautiful pattern in the NASDAQ. It stopped exactly at the 61% retracement yesterday. We made the same low last night as we did yesterday. So as we can keep the NASDAQ above 45.50, it's got a chance to rally. The high that we made yesterday was just a tad above the 786 by about 3 points. And then the market, dropped over 130 points in a matter of 7 hours of trading. So we want to watch that. This is something that is really, really important. Now, the main one that we want to watch here, I wanted to show you the New York Stock Exchange Index that our friend Mike from Thailand called on us about yesterday, because what we want to see here is these lower tops that we've seen all along here. And as you can see, this is 60-minute chart on the New York Stock Exchange Index, and you can see that it stopped at the 61% retracement from the December 1st high. But what I wanted to show you is something that happens to all markets, and if you really want to really get an idea of how these markets move, you have to study them, and that's primarily what you do when you're doing pattern recognition, is you're studying these different patterns. But if we take a look at the daily on the New York Stock Exchange Index, and this is what Mike was really focusing on, was the fact that these rallies that we've had after the big ABCD on November the 2nd, the last rally, the one that we had yesterday, was exactly equal to the exact point that we had going into the rally from November the 16th into November the 30th. Then we came down into the 14th, which was a Norman Winsky turn date, and then we rallied up and we stopped at the same amount, we only did it in 3 days, and then the market reversed from there. So we want to keep an eye on this level, because if we can get this market to turn up, then it's got a chance to be bullish. But right now, this is in a downtrend. We've got lower tops going down for a long time. We made that major ABCD back in November, and now we've had 2 more lower tops. This looks like that picture of the sink that I put out early this morning here in TFNN. It looks very, 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 very bad. It looks a minimum of another 10% to the downside, taking us down to the 786 at around 97.32. So that's what it looks like. It just doesn't have the bullish consensus of what you want to look at. And if you look at what the breadth has been doing, it also is really, going down the tubes also. So those are some of the things that we're keeping an eye on today as we're looking at some of these charts. But yesterday's action had to be bullish. It wasn't. And that tells us that we have a potential for this market to turn down. Now, this market has surprised a lot of people, me included. And basically, what we're looking at here is the fact that we have a situation where we stopped exactly at the fib point last night. And again today, that was at 2015 in the S&P. And going below that, anything below 2009 to me would be, heading down to test that low and probably go lower than the 1983 level that we had on the 14th. So the thing is, the market's rallying for a couple of days, and it just doesn't have very much oomph. Now, there's been some discussion here in the Tiger TV room here, the trading room, the Tiger Den, about the grains. We had a pretty good rally yesterday in wheat. It rallied about 16 cents. Bean rallied about 20 cents. So we've got a chance here that we could be bottoming. I'm not saying it's the bottom yet. I got to give it a little bit more time. But as you know, we're looking for a bottom in some of these things, and we want to be able to see if it's going to hold this level. You can see what's happened to oil. It didn't hold the level at all. And let me show you another one that this is one of the reasons why we use money management and stops in here, is because of the fact that we have some markets that really are heading down to the downside. So we'll take a look here at this one right here, and then we will we got a caller from Miami. Dan, are you there?
Yeah, I am.
What can I help you with?
I'm looking for a possible area, the longer-term daily short on the Dow Mini YM.
Okay. I think that time was yesterday, because that's where we hit all of our numbers. We hit a 786 in a NASDAQ and a 61% retracement. What I would do you do any Fibonacci work at all, Dan?
Yeah, all the time, yeah.
Okay, what I would do is take yesterday's high in the Dow E-mini and then take the low that we made last night and then look for a 382 retracement of that low. I'm not sure exactly what it'll be. I think it comes in at around 2030 in the S&P futures. But if you look at that Dow E-mini at the 38%, it shouldn't get much above that if it's really bearish. If it does get above it, maybe it's going to go a lot higher. But that's the place that I would be looking. I certainly wouldn't sell weakness in these markets because they just turn too quickly, and you just don't want to mess with it.
I'm thinking about it as a longer swing trade,
Okay, that's what I would look. That's what I would be looking at. Yes.
Okay. Well, okay, I get it. Thanks a lot.
Thank you, and happy holidays to you.
You also. Thanks.
Okay, thank you. Okay, I wanted to mention this since we're talking about the E-mini here. We'll pull this up and take a look at it, and we'll pull this up so everybody can see it. We've got the break coming up, but we'll discuss it after the break. But as you can see here, from the high we made yesterday, we made a 382 retracement, and now we're heading down. We'll be back in just a few minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back, and I've put a chart up here. Yesterday's action in the E-mini S&P, because I wanted to show you. I use a 4-minute chart because the Earth rotates 1 degree every 4 minutes, and so it's really no different between a 3-minute or a 5-minute. I guess it's just a little joke of being esoteric or something. I don't know, but anyway, when we had that point C there at the 382 retracement, you'll see we measure down to 2015. Now the 382 rally back on this takes you back to that 2036 level. That's about 10, 11 points from where we are right now, and that's where the old lows were. We hit those several times at 2038, so it's not unusual for the market to rally back, and that would be a 382 retracement back at this market. So watch the importance of 2030, 2035 to 2038 in the S&P today, because if that turns, then this ABCD could be pretty much of a because if we hit that on the half-hour chart, on the hourly charts, and on the daily charts, that 2015 was an exact 61% retracement, just like it was in the NASDAQ. So watch that very closely today, because that'll be a key thing, I think, to be to be watching. So we want to be really careful. Well, these things, they have a tendency to go up 300 and down 300. Remember, what we've always said is anything that can give you 300 points on the day can take 300 points away from you. Now, before we took the break, I was getting ready to talk about natural gas when our friend Dan from Miami called in, and we showed the ABCD pattern that we had in the natural gas. But I just wanted to show you why these markets can be so treacherous. So you'll want to see what we're looking at here in natural gas. We got down. I mean, we went really down hard today. We were down another 4 or 5%. We got down into the 160s level. The 1.618 expansion of this whole move in natural gas is $1.65, and that's not very far away from where we are. So we'll just have to wait. But it gave a good trade. It worked for the first profit objective, and then after that, it gave up the ghost. And boy, when it gave it up really fast. And that's why you've got to remember that the secret to trading, folks, is not when you put a trade on. It's what the exit is. Putting a trade on is the simplest thing in the world. You either say buy or sell. The secret is, where do you get out? One of my favorite movies is Knock on Any Door, which was with John Derrick. And in that line, there's the line of the Navy SEALs. You got to live hard, live fast, love hard, die young, and make a good-looking corpse. That was from the movie Knock on Any Door, and I think it was 1949 or 1950. He ended up marrying Bo Derek, as most of you folks know. But he plays this detective in there, and when he walks into the room, he's looking around, and the guy says, "What are you looking for?" He says, "I'm looking for exits." He says, "I never walk into a room unless I can see 2 exits." And so that's what you should do when you're trading, is focus on your exits, because that's where your risk is. It's all about risk control. You can't always pick the things that you want to get, but sometimes you'll be able to get the things that are important to you. And the important thing is the risk that we're dealing with at these times. So just remember that that's the really important thing, to be looking at. That's the way it looks like from here in Philadelphia, on the corner of Broad and Spruce at the Duke and Duke offices, which is actually the Wells Fargo building. If you ever come to Philly, you got to be able to really see this building, because it's just right out of the movies. They haven't changed a thing. Okay, the big one happening today. Treasury bonds. We've gone up and hit the 618 retracement that we talked about yesterday. We got to that 156 and change level. Excuse me, almost 157 is what we were looking at, and that was a pretty good. Let me get this bond chart up so we can take a look at it. The notes were actually the weaker of the group here, and I have to put this up. Give me a second, and we'll, because we did hit this 61% retracement, and then we'll get it. We have some requests on some stocks after we come back from the break that people have asked about, and I'll try to cover those when we come back from the break. But this is a real critical level. We have an ABCD in the bonds today, and if it holds, it's going to be a real interesting one, because we could have another move down. Remember, the stock market did exactly the opposite of what the people were expecting to do, as did the bond market. So don't think there's going to be any different than it did before, because it'll surprise you. These markets are very jumpy, and that's ideal for pattern recognition, and just follow the numbers and the patterns. Some work, some don't. That's the bottom line. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, looking good, Billy Ray, feeling good, Lewis. This is Billy Ray Valentine for our show on Friday. The markets are closed early on Christmas Eve, and they're also closed a week from today on Christmas Day. And I will be here all next week going over the different markets. Anyway, I wanted to, we've talked about the IBB, we talked about the Dow E-mini, and we had a stock that someone wanted to look at, and I've got it here. If I can just find it, just give me a second. And the old stock on, oh, here it is. It's Priceline. Our good friend Priceline Charlie from La Paz, Mexico, has asked a question, and I'm going to put it in here to let you folks take a look at it. This is the long-term chart for the whole year. As you can see, we made a butterfly pattern on Priceline on the way down there right after the first of the year. It was a beautiful ABCD pattern. In fact, there were 3 drive patterns. There were all kinds of things telling you that it was a pretty good bottom. We rallied into May. We pulled back to a perfect quick 61% retracement in June. And then you can see the large ABCD pattern that completed up at the top, culminating with a 3-drive pattern and a butterfly pattern up the 1476 level. We dropped down to 1214 on November the 14th, and then we've rallied up. And then we've started back down again. So this market has probably made its top for, well, it's definitely made its top for 2000. Well, not definitely, but it looks like it's made its top for 2015. Longer term, we'll have to wait and see, what's going to be happening about that. So we'll see if this is going to be going back to what we're looking at. Someone's asked a question about the breadth. The breadth looks so bad, folks. I'm almost afraid to even push it up here, but I will, since you've asked a question about it, and we'll just pull it up here and take a look. And be helpful if you guys call in with questions. It makes my job a whole lot easier, because I have to prepare these things to make sure I can get an hour's worth of information, and since I only know 5 minutes worth of information, I have to bluff the rest of it. So keep in mind that I do need help here, so be sure to give me a break when you get a chance. Okay, the next one that we had, I believe, is the 1 second here. I think this was a request. Yep. Uh-oh, it's not coming up. This is not good. Ah, there we go. This is one of my favorites. This is Netflix, and give me a second here. We'll take a look at this, because here is another stock that I think is getting ready to go down. We made a beautiful ABCD pattern up at the 133 level. We backed off to 114. Yesterday's high was exactly 61% retracement to the exact tick at 126.27. And that tells me that that should be the high. If we get above that, then this will all be wrong. But right now, it looks like we made a butterfly top up in here, and which we've been doing with Amazon and all these others too. The biggest, of course, the strongest of all of them has been Google. And I'm anxious to see what Disney's going to do with the Star Wars movie, because the doggone thing, you can't even get tickets for it here in Philly. It's just, they even start at 7 o'clock in the morning. Can you believe that? The only time I ever went to a morning movie was in 1972 when I went to see The Godfather at Grauman's Theater in on Hollywood Boulevard in Beverly Hills when it first opened up. And it was amazing. It was 8:30 in the morning, and the darn movie was packed. It didn't open for regular until that evening, but they did start an early morning show. It was amazing. On Star Wars, Milken, he rented the theater for the whole day for all the Drexel employees. So we had the whole day in the theater to see Star Wars as many times we wanted. It was all free, popcorn, candy, everything was all included. Mike picked up the tab for everybody, and that was a lot of fun. My daughter got lost in the theater because it was so big. She was a little squirt, and she got in there and she was lost, and so she screamed out. She said, "Dad, I'm lost!" And everybody started laughing, and I finally got her. My heart was beating so fast. Not as bad as it was yesterday when I had that 2-year-old falling out of the back window driving down South Street. That scared me, relatively terrible, So we'll see. I understand that Vladimir Putin is endorsing Donald Trump. Now that's a good sign of the time. So we'll see what happens from there. I think actually, as long as we don't have a politician as president, I think we'll do okay. That's basically what we want to look at. Okay, we got a call here from Massachusetts. Charlie, are you there?
I'm here, Larry. Hello.
What can I help you with?
Well, I missed the first part of your program. I'm in SQQQ, the short pro shares.
I like that. I think we're going, if we go below 2010 or 2009 in the S&P today, the lows so far has been 2012. If we get below 2010, then I think we got a chance to go a whole lot lower in this, and that'll be breaking the 61% retracement on a Friday, And, this is going to, when people look at their charts, if we close down today and these people that run, other people's money with no skin in the game, the mutual funds and the hedge funds, they'll look at this and say, gee, this doesn't look very good. And then you could start to see a capitulation and some selling coming in on Monday. So that's what I'm looking at. So
Okay.
I like that position.
Then the other one is you were talking about Lab D or something like that. I can't remember what it was. I was
Yes,
kinda in and
Lab
out of
D,
things. How about B is in Bravo, IS?
BIS?
Yeah, BIS. B is in Bravo, I is in India, S is in Sam.
Okay, let me pull that up. If you give me a second here, I have to add this because I'm not much of a stock trader, but I do know how to put in a symbol. At least I did as of yesterday's. Let's take a quick look to make sure. Maybe I have this in here. No, I have BID, but I don't have BIS. This hasn't anything to do with the other BS, does it? Hold on just a second here. We'll take a look here at some of these things here, and we'll see what we got. Okay. Hold on. Oh, this darn thing is frozen up on me. The problem is when I pull these up, I have a tendency to, now I've lost data. Doggone it. Very sorry, my friend. I don't know what it is. Maybe it's the internet connection here is not as good as it is as it is in home. So, Jared, just a second. They've knocked me off, but I might get it back. Hold on, just a second here. Oh dear, give me a second. Oh boy. Bear with me here. I think this will do it.
I'm
but
patient. I'm patient.
Yeah, I know you are. You get the same price whether we do it or not, right? Okay, now it's the same situation. I'm not able to post it, but it's almost exactly the same chart. Are they in the same business?
Well, the short Qs, that's the Qs being short, the SQQQ. This is the biotech short. ProShares. So it's like ProShares, ultra short, biotech.
Well, it looks exactly like that LABD chart. I mean, they're identical. You could lay one over the top. They both topped on the 28th of September, making a perfect ABCD move, and then they've moved down, and it's also made a 382 retracement. So all of those are lining up the right way. I mean, that's just what it just lined up perfectly. That's all I can say.
Great. Well, that makes sense. Okay. Thanks, Larry. Thanks for your work.
Yes, thank you for calling in, Charlie, and a happy holidays to you and your family.
You too, my friend. Thank you.
Okay. Bye-bye.
Bye-bye.
You know, folks, when I look at all the things that I pull up to watch here, to see so many things that are traded, it's just absolutely mind-boggling, the number of things. Because when I first started trading, we were looking at just a very, very few things that we could trade. And now I think there's 280,000 different things that you can trade using, options and spreads and all the other stuff. So it's really, really an amazing thing. To look at this. So the market, we had a pretty good early morning burst, and now we're heading down towards the lows. Folks, if we close really badly today, just look at those charts. They're going to look very, 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 very bad, and you don't want to mess with it. We've had almost a dollar rally in oil, but this market's oversold. I still think we're going to have some type of a move. At least get a, $10 or $15. Just too many people bearish oil. That's just the bottom line. Now, I want to share with you a very important chart that's been updated. This is from our good friend Jim Bartolioni, also my trading buddy. And I wanted to show you, this is the one that you really want to look at because I think this has got a real chance. This is the Canadian dollar, also known as the loonie, a monthly chart going back to 1972. And what I'd like for you to look at are those purple and blue lines there. Those are equal moves. And as you can see, there have been 4 of those puppies, actually 3 of them, that have been absolutely perfect. I mean, just spot on. And we are reaching one right now. And if you look at this really closely, without too much of imagination, you can see the left shoulder Then you can see the head, and then you can see the right shoulder where we are right now. This is a head and shoulders pattern, so we really need to watch this Canadian dollar very, very closely. We hit 140 today, and I'll be watching that come Monday. There was some inflation data that came out that made the Canadian even weaker. So this is, basically when you're doing this, this is the dollar against the loonie. This means that the Canadian is dropping. So, you want to be looking to buy the Canadian dollar against the U.S. dollar very soon. We got this in our watch list, but nothing has happened as of yet. But we want to watch it very, very closely. It's the fact is it's having swings like pork bellies used to, back in the old days. So it's been a really wild ride here on some of these things. We've had a little rally in the gold. We've rallied we rallied $17 almost, which is that 1/2 harmonic in the gold. And if we can get gold above 1063 today, it might have a chance of making a double bottom down at 1047, but I'm not quite sure of that. We'll have to wait and see if that's going to happen. We'll just let the trading gods tell us if that's going to be the case or not. So anyway, we'll see what's at. We got a good shot here in the gold here. We're going to be we're running up here. We got to get above the 1060 1062 level. We got a shot in the gold, so I would think that would be something that we could probably take a look at also if we were looking at gold. We've already jumped to 1064, so that could be a sign that we're getting ready to maybe have made a double bottom in the gold, but we'll have to wait and see what happens with that. Okay, the next one we want to look at is I want to talk just a little bit about the grains, because the wheat yesterday came right off of the 786 level, right at the exact number at 472. We rallied 15 cents, which is hard, and it's not easy to do when everything else was getting hammered. We had rallies in corn and we had rallies in beans, so we've got to take put these in the crosshairs, because we've got a chance here where we could possibly get a move here in some of these things to tell us that we are very, very close to a place where we're going to have a turn in the grains, which, this could be all commodity related. And as we mentioned many times, the long-term ABCD in some of these things are coming close. What we're doing so far is very, very little, but thus far, we're not seeing a great deal so far anyway to look at this stuff. In other words, it hasn't turned yet. That's the bottom line. I'm searching for words, and it's not easy, but that's what I'm searching for. So we'll watch it. The keys today to watch are the stock market. If we go below 2010 in that S&P, I wouldn't want to be long. And if bonds should be topping in here also, because they made a 61% retracement in the notes perfectly, and we made a 786 retracement in the Treasury bonds, and so that's what I would be keeping an eye on. So those are the ones that are in the crosshairs right now. Right now we got silver up 34 cents, gold's up $13, which we came off that magic number last night of 1050. That was the number we've been watching for quite some time. And for the gold to be up $13 after being down 25 yesterday is no easy matter. And we've got silver up 40 cents off its low. So all of these are starting, to give an idea that they could be turning. So those are the things that we want to be watching, and then we'll see where we stand, and then we will go on from there. And hold on one second. Okay. All righty. And all right, the next level in the gold, let's just check it. Someone's asked this question here, and I'm going to have to put up a little different chart. 1 second here, and I'll get this chart posted into the room if I can. The 61% retracement of this move from yesterday, we'll get right back here. That comes in at 1066.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, boys and girls, this is Billy Ray Valentine from the offices of Duke & Duke here in Philadelphia, Pennsylvania. I want to bring up one more thing, and that's this Canadian dollar. Folks, we've got to watch this. This has got a lot of things telling us that it's getting close. It's not here yet, but we've had all kinds of wild action today. If you'll take a look at your U.S. dollar, Canadian dollar chart, I'm not able to pull up an intraday chart, but it has had swings that reminiscent of the old February pork belly days after a frozen belly report that we used to get on Thursdays. But this thing is really jumping around. The chart that you're looking at here is still at 138.27, and we actually hit 140 today. That's a 1.27 expansion of the CD leg. That was as high as number that I could find. And that matches the number that I put up from the long-term monthly chart that we have there. So we want to watch it very closely. The grains are rallying strongly again today. We've got wheat up another 8 or 9 cents. Well, it's up 10 cents now. And so we're starting to see some movement, whether it's due to this warm weather that we're having in the east or not, I don't know. But the charts are telling us that we're near a bottom, and we'll be watching that very, very closely here. The key, folks, for today is to watch what happens with the stock market, especially the stock index futures. If we close below 2009, you're going to close below the 61% retracement of the low we made on December the 14th. In other words, we've already retraced more than that in just a matter of a day and a half. And so we want to watch very, very closely, this number, because you're going to come in Monday, and these people are going to look at their stuff over the weekend, and they make their decisions over the weekend, and that's why Mondays are usually so wild. You could see a really bad day on Monday. And remember, we have a really low volume week coming into Christmas week. So that's the thing to keep in mind. I'm telling you, this is for your 401ks and your other stuff. I got friends that, I've been trying to get them out of this stuff for the last 6 or 8 months, and some of them, got out near the high back on May 19th. See, live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.